You'll find the link to AI generated market predictions journal, the crypto edition in the description and pinned in comments below. Most people lose everything in crypto, not because the market is rigged, but because they misunderstand three tiny numbers and one human weakness that nobody warns them about. Later, I'll show you the exact moment I almost lost 40% and how one simple rule saved me. In the next 30 minutes, you'll learn what RSI actually measures and you will learn what MACD actually measures. You will learn what moving averages actually measure. You will learn how investor psychology makes them powerful and how investor psychology makes them deadly. You will get a two-step checklist that prevents panic selling. You will get a six-step survival system that keeps your portfolio alive during crashes. This is not financial advice, it's survival training. If you want crypto education without the confusing jargon, subscribe now. I post weekly videos that help beginners avoid expensive mistakes. Keep watching. In a minute, I'll reveal the lie RSI tells almost every beginner. RSI, MACD, and moving averages look like secret codes, but they are just translations of price behavior. Imagine the market as a tug of war. RSI measures how hard one side is pulling. It tells you if the market is overbought or oversold. Moving averages smooth the rope to show the trend direction. MACD is a spotlight showing when momentum is shifting. None of them predict the future, they just tell you what's happening now. They tell you how hard the crowd is fighting. Treating these like fortune telling tools is how people blow up their accounts. Fear and greed make that mistake irresistible. But RSI has a hidden trap. It often lies to beginners. Here's the lie next. The textbook says RSI at 30 means oversold, so you should buy. But here's the truth. Oversold doesn't mean bottom. RSI compares average gains and average and losses over a period. When losses dominate, RSI drops. But in a strong downtrend, an RSI of 30 can stay there for weeks. Price can keep crashing while RSI stays low. That's why you must check the trend first. Buying just because RSI hit 30 is how beginners convince themselves they caught the bottom. Then they watch their portfolio bleed. Next, I'll give you a two-step rule that prevents this exact mistake. Stick around. I'll show you how using one filter stopped me from losing 40% last year. Moving averages look boring until they save you from chasing hype. Moving averages smooth price to show the trend. Short MAs react fast. Long MAs act like anchors. Use the 50-day and 200-day pair. When 50 crosses below 200, that's a death cross. That's bearish. When 50 crosses above 200, that's a golden cross. That's bullish. But crossovers lag. They are not real-time alarms. People buy on hype when the short MA spikes up. They get trapped when price snaps back under the long MA. That same MA pair could have saved them thousands. But when you combine moving averages with RSI, the results are powerful and counterintuitive. Later, I'll show you how a false golden cross fooled professional traders and how to spot it. MACD feels magical. It gives crossovers and histograms. It looks fancy, but Here's the surprise. The histogram often signals before price moves. MACD is 2 EMAs subtracted. The histogram shows divergence between MACD and its signal line. Look for divergence. When price makes a new high but MACD doesn't, that's bearish. But divergence can persist. It's a warning, not a timer. Seeing divergence and doing nothing is common. So is misreading it and capitulating early. Either choice costs money. Next, I'll show a real trade example where MACD saved a portfolio and how you can copy it with a tiny checklist. You will get the checklist next, the one I use when my heart starts racing. Most beginners think indicators fail them. The truth is they pick the wrong time frame. That's the mistake that eats watch time and wallets. Time frame mismatch is basically betting on noise and blaming the chart. Next, I'll give you a checklist that fixes time frame mismatch. And I'll give you the exact words to say to calm yourself when the market screams. Use this checklist and you will avoid the most common panic sell setups. If you remember only two things from this video, make them these rules. Rule 1 is the trend filter. Check the long moving average on the daily or weekly. If the long MA shows a downtrend, treat RSI buy signals as weaker. Rule 2 is momentum confirmation. Require MACD or RSI divergence or a MACD crossover. Use the time frame that matches your trade. Following these two steps prevents many I thought it was the bottom regrets. I'll give you two simple escape phrases to say aloud when panic hits. They stop impulsive selling. You'll hear the two escape phrases next. They are shockingly effective. Charts are math. Humans are stories. Our brains always try to make the chart fit the story we want. Confirmation bias makes you notice only signals that fit your hope. Loss aversion makes you hold losers and sell winners. Anchoring causes you to fixate on purchase price instead of the thesis. Recognizing these biases is as important as reading RSI. If price drops 25% overnight, what's my plan? Do I buy more? Do I hold? Do I exit? State it aloud and write it down. Without a plan, you will be reactive, and the market punishes reactions. Next is the biggest insight: how to pair indicators with psychology to actually follow your plan. Stay. The final section ties everything into a single survival approach. Here's the single system that ties indicator rules and psychology together. Use this and you will trade like a plan, not emotion. Step 1 is define your horizon. Decide if you are trading day swing or long term. Step 2 is trend filter. Confirm weekly or daily MA direction. Step 3 is momentum check. Require MACD or RSI confirmation on the matching time frame. Step 4 is position sizing. Risk only 1 to 2% per trade or use fixed allocation for long-term holdings. Step 5 is exit rules. Use a stop loss or mental exit based on signal break. Never exchange exit without a new signal. Step 6 is emotional pause. If your heart rate spikes, take 5 minutes, read your written plan, repeat your escape phrase, You are no longer guessing. You are following a survival system that respects markets and your emotions. If you use this for 1 month, you will notice you panic less and think more. If this survival system helped, hit subscribe. I make weekly practical crypto lessons that cut through hype and protect beginners. Click subscribe so you don't learn the hard way. But before you risk another dollar, watch the next video. It shows wallet safety, it shows phishing protection, it shows recovery phrase, best practices. That one little mistake is the fastest way to lose everything. I'll show you exactly how to avoid it.